Welcome to Bookkeeping Level 1, how to contextualize bookkeeping. So what we're going to look at now is how does bookkeeping fit in the context of overall finance function of an organization. But bookkeeping is the foundation upon which accounting records are produced and also upon which financial management is engaged. So first of all, we need to see what bookkeeping is actually concerned with. Bookkeeping involves recording the financial transactions of an organization. So it doesn't matter whether you're a multinational or a small corner shop. Once you have financial transactions, you need to record them, and your bookkeeping system will capture that particular data. After you've recorded your basic financial transactions, then accounting kicks in. And accounting involves using the financial records to create financial information, i.e., an income statement, a balance sheet, or a cash flow statement. And then after you have those three documents, which are known as primary financial statements, you can produce or engage in financial management. And financial management involves utilizing financial information to facilitate financial control and decision making. So here's the question. How does an organization obtain the data concerning financial transactions? So you want to do your bookkeeping. Where are you going to get this information from? Because bookkeeping involves recording the financial transactions of an organization. Well, the answer is the financial transactions of an organization are contained within source documents. So sometimes one question leads to another. So now we want to be very clear of what a source document is. So what are source documents? Source documents are documents that detail financial transactions relating to matters as such matters as sales, purchases of products and or services, and other types of financial transactions such as loans, taxation, and capital. So here's an example, a purchase invoice. So now we have this particular company here, and they have purchased something from a company called Office Supplies Limited. The customer, i.e. us, is Trendy Tables. The date was the 15th of January. And what did we buy? One conference table for $1,500 or euro or sterling or whatever currency you're using. That's all it is. That's an example of a source document. So by having an understanding of a source document, we'll know that this is where we're going to get the information to populate our bookkeeping records. Here's one now. Previously, we bought a table from a supplier, and now we're selling it ourselves to somebody called Joe Blog. So this is a sales invoice from us, and we're selling this one conference table that we purchased previously. And obviously, we're selling it at a higher price than what we bought it for. Therefore, we can make a profit. So we have a purchase invoice and a sales invoice. We buy it from somebody for $1,500 or euros or sterling, and we sell it for 2,750. The difference between this figure here and this figure here will be our profit. But we just can't have all these pieces of paper or these soft copies hanging around computers unless we can trace the information in a systematic way. We won't be able to produce any bookkeeping records. So let's have a look at that. So another example of a source document will be a bank statement. So this could either come through the post or you might be getting it online. And pretty straightforward stuff. It just details the dates transactions took place, what was the actual transaction, was there money coming in or money going out, and what is the balance on the account. And this just tells us that an EFT stands for electronic fund transfer. So basically there's payments out to some company called Tech Limited here, and then some property service company there. That's all that is. So books of prime entry. The data relating to the financial transaction contained in these source documents need to be recorded in the books of an organization. The first recorded financial transactions are logged in the books of prime entry. So we take the information, the data that's contained in these, and we're just going to create lists in relation to them. And to give you an example of the amount of books of prime entry, we could look at this particular thing here. The reason they're called books is originally they were in these ledger type books, which were manually written with ink or even pencil back in the day. But now they're all contained on computer and software. But the exact same process is conducted between this one and this one. That's all you need to know. So let's have a look at the different categories. We have a sales daybook, which lists the stuff that you buy or sell, I should say. Stuff you get return customers day, purchase daybooks, and petty cash book, and cash book in general journal. That's what it looks like, and that's the summary.